Hi there, and welcome to another video where I want to present you another algorithmic trading strategy for cryptocurrency trading. And today I'm breaking down the CLUK-HA-NEX HHLL66 strategy, and I will show you how it combines Heikin Ashi candles, Bollinger Bands, and smart trailing buys to pinpoint entries and exits. So stick around because this might just change your trading game. The CLUK-HA-NEX strategy looks to be designed for one clear goal: capturing short-term reversals in volatile crypto markets. It uses a powerful combination of indicators to identify high-probability trades, like the Bollinger Bands and Heikin Ashi candles that are configured in the strategy file. At the top are also some buy and sell parameters configured, in case you want to do some hyperparameter optimization later on. In this strategy are also 6 ROI levels programmed, where at different times profits will be taken, ranging from 0.5% after 292 minutes to 10% when it's directly reached. The stop loss has been disabled in this algorithm by setting the stop loss setting to 0.99, which is 99% stop loss. There is also not a trading stop loss activated, so this means that the programmed exit signals later in this code will take care of the position setting. The initial time frame for the strategy is set at 5-minute interval, and we will see later if this is the most effective time frame for this strategy. And as I said, the algo is programmed to exit on the sell signal, and also a custom stop loss. In this section the parameters are set for hyperoptimization. The range in which is sought, the default value, if this is a buy or sell parameter, and whether it should be optimized is all included in this setting. The algorithm uses the 1 hour time frame as the informative time frame for determining the larger trends. And in the following couple of methods there are a whole range of exit parameters configured. We just saw that this strategy doesn't use a fixed stop loss, but instead it uses a smart dynamic stop loss that adjusts itself based on how profitable your trades become. Think of it like a safety net that moves closer as your trades climb higher, locking in profits and reducing risk. Now the rest of these rules you can put in your favorite language model and ask what they do. I will quickly continue to show you some of the most used indicators in this algorithm. And these indicators are configured in this section, like the Heikin Ashi, Bollinger Bands, some EMAs and SMAs, and average volume lines. Also the rate of change, RSI, volume weighted moving average, check-in money flow and percent rate changes are configured to be used in this algo. And all these indicators are used in the buy rules that signal to buy into a position of a crypto asset that conforms to these rules. In this case they will be bought when the 1 hour rate of change is above a threshold, price is below Bollinger Band's lower band with a significant volatility, or Heikin Ashi close is below the EMA low and is also slower than the lower Bollinger Band, perhaps to buy into a temporary dip in price. And price is also significantly below the recent highs and above recent lows. The algo exit trades based on multiple conditions, including Fisher transform indicating overbought conditions, price action weakening, and when RSI and moving averages signal trend exhaustion. Now after all this talking way too much about the contents of this strategy file, it's worth nothing if there is no substantial backtest results from these rules. But luckily for us, the backtest results do promise some possible future gains if we are going to use this algorithm for our cryptocurrency trading. But be very aware though that these are just hypothetical results and do not guarantee anything. You should do your own research and forward testing to make yourself absolutely sure that this is a possibility for future gains. So you are warned. Under my backtest circumstances, the pairs, time range and settings, the following results are made. The 5-minute time frame was indeed the best time frame to use this strategy on. The ROI had a 340% profit with over 9,000 trades. The win percentage, however, is pretty low. I've tested algorithms that had much higher win rates under these circumstances. And although the drawdown is pretty mediocre for a scalping strategy on the 5-minute time frames. But performance indicators like Sharp, Karmar and Sortino still favor this algorithm. Now the profit factor is 1.26, which is still profitable, but barely. And of the 50 pairs that I test, only 73% perform well with the trading rules I just showed you. The equity curve plot shows that using this algo does present us with some risks. It was starting good, but when markets had a bearish period, the algo was responding quite negative to these circumstances. Only when the previous bull run market started, and this algo started to respond well and gained equity quite quickly. But still, with a win rate that is slightly over 50%, using this strategy is a little bit tricky and might get on your nerves. A minimal profit factor does not help too. I do not mind a win rate of 50 or less than 50%, but the profit factor should make a lot of things good, and this is not happening either. Unfortunately, the entry reasons are not accompanied by labels, so all the entry rules are registered as one single enter tag. And the exit rules are divided in multiple methods and rules that contain labels, and here we can see that the normal trailing stop loss makes most of the gains here. The ROI is the second way where this algo makes the most profitable exits. Now getting back to the equity curve again, here we see that the period of 2020-2021 and the first half of 2022 has drawdowns. This indicates too that we have to be aware that the rules in this specific algo are heavily influenced by bear market periods. Compared with the best scoring algorithms, this strategy is indeed not the best scoring, and its scores does not make it enter into the top 30% of best performing algorithms. However, I do think that with a bit of tweaking or optimization of the parameters that are currently set in the code here, the performance can be greatly improved. But do not optimize too greatly, because then you will introduce some heavy curve fitting. But if you do this carefully, then I think that this could be a well-performing strategy in the end. I've written all about the prevention of biases in algorithms in my ebook for beginners, so if you're not familiar with these, then I'll suggest you to read my book about it. And after you have optimized these parameters, you have to have a firm backtest or forward test again too, before using it with real money. Because rule number 1 here is to never use untested strategies with real money in live trading. Now, if you found this strategy test valuable, then please hit the like button and subscribe for more strategy breakdowns in the future. All my backtest results, detailed performance reports and the full strategy code are available on my Patreon page. Your support helps me to create more content and share more strategies with the community. Thank you for watching, and I will see you in the next video. Goodbye!